Okay, tonight we'll be looking at a financial reporting, um, FR, and our topic could be IAS 24, related party disclosures. Now, we want to look at who are the entities or individuals that are related to the reporting entity. So, we want to know those that are related to that reporting or the company that prepared the financial statement. Now, what is the objective of this standard? Now, the objective of this standard is to ensure that an entity financial statement contain the disclosures necessary to draw attention to the possibility that its financial position and profit or loss may have been affected by the existence of related parties and by transactions and outstanding balances, including commitments with such party. So we just want the users to understand that during the year or during the reporting period, the entity transacts with people that are related to the company. Just like when you say you have a store and you have the storekeeper or a sales rep is there. Now, when the sales rep purchase item from the store, that sales rep is a related party to that store. So we need to the sales rep need to tell the owner of the store that he or she purchase an item from the store, because mostly it affects the financial statement. Most cases the transactions are not done at arm's length. So that's the reason why the ISB said in any entity at the end of the year they should disclose any party related to the entity. Now, what's the scope of the standard? We said IAS 24 applies in identifying 1A, identifying related party relationship and transactions. Now, I want to identify what's the relationship. Are they related? Just like say when I say we are related, you ask, how are we related? Are we related by blood? Are you my sister? Are you my cousin? Are you my family member? So how related? So that you must sell the entity, or you must sell the individual or the intended users, the relationship between the related party and the transaction. What did they buy? What is the item? Is it non-current asset? Is it goods? So you must tell them the transaction. B, identifying the outstanding balances, including the commitment between an entity and its related party. You must tell us the outstanding balances. What are the balances that you mean? Okay, how much is the value of the item transact, and what is the balance? How much have you paid? So this should be disclosed. This is like a disclosure and the financial statement. Then C, identifying the circumstances in which disclosure of the items in A and B is required. Now, the standard now go further and says no, it's not all related party transactions must be disclosed, because you must look at the materiality of that transaction before you can disclose it. Now, let me draw you back to your previous class. When we say materiality, if you can remember that for you to give benefits or give a financial now, for you to give any benefit, you must look at the cost of giving that benefit. Now, you want to identify a related party and a transaction. You want to tell the internal users. Now, that is the benefit of giving you are doing to the internal users. Now, what is the cost of doing that? Now, if the costs if the cost exceed the benefit, you don't have to go further and give the benefit. So that means you don't have to disclose the related party transaction. Now, another thing again that you must look at is the materiality. What do you mean by materiality? Materiality, according to the definition in the ISB, we said materiality is any omission, any inclusion of a particular transaction in the financial statement if the omission or the inclusion will affect the decision making of the intended users. So we said that item is what? Material. And materiality threshold is always 1%. Any item that is 1% of the total revenue, we say that item is material. But if that item is not 1% of the total revenue, we say that item is not material. So if you want to disclose a related transaction and you find that it's not material, so you don't need to disclose it. Now, then D, determine the disclosures to be made about those items. So you must determine the disclosure that will be made about those items. Now let's look at terminology according to the standard IAS 24. What is related party? Said a related party is a person or an entity that is related to the reporting entity. So a related party can be any person, individual, or another entity that are related to that reporting entity. Now, when we say a person, how will a person be a related party to the reporting entity? We said if it has control or joint control of the reporting entity. That means either person has control or joint control of the reporting entity, or if it has a significant influence over the reporting entity. That means have a significant influence over the reporting entity. Then 3 is a member of a key management personnel of the reporting entity or its parent. So when these 3 items are in place, then we said that individual, that person is related to that reporting entity. So how we say an entity, another company, is related to that reporting entity? So we have eight conditions before we say any entity is related to the reporting entity. So 1, the entity and the reporting entity are members of the same group. Now when they say that members of the same group, when we say the reporting entity and the another entity, they are subsidiary. Maybe the reporting entity is the parent, while the other entity is the subsidiary. So we say it's a parent and subsidiary relationship, or both of them, they are subsidiary to a particular parent. So we are saying they are also related. One entity is an associate or joint venture of the other entity. Now we said one entity is an associate or a joint venture of the other entity. That means when the 2 entities they are into a joint venture, maybe they have 50-50, they put that resources 50-50 to invest in a particular investment. Then we say both entities they are into a joint venture, so they are venturer or they are venture, so or they are associates in a particular business to achieve the same goal. So we say they are related parties. So any transaction between both of them should also come in a note to tell the users of the financial statement that these people are related to our company. Both parties are joint ventures of the same third party. Maybe both parties they are joint venture of the same third party. Let me say they have a third party and the 2 entities they are joint venture and they are from a particular entity. I mean the entity is the one that brings both of them to come together to join as a joint venture. So we say they are also a related party. One entity is a joint venture of a third party and the other entity is an associate of the third party. Now for example, let me say they have one entity is a joint venture of the third party. Let me say the third party is a parent and the company is a joint venture, while the other one that interacts with the company is an associate of the parent, which the parent is a joint venture of the reporting entity, and the associate of that parent they now transact with the joint venture, which is the reporting entity. We say the associate company and the joint venture and our reporting entity, they are related party. The entity is post employment benefit plan for the employees for the reporting entity. The entity is controlled or jointly controlled by a person. So let me say it's just one owner that have the joint venture and the entity. So that entity is also a related party. A person having control or joint control of the reporting entity has significant influence over the entity or its member of the key of the key management personnel of the entity. Now let me say a person is working for the joint venture, and that person is also a member of the key personnel of the reporting entity. Now that company that is working for, that is working for that joint company, that company is a related party to the reporting entity. The entity or any member of a group of which is part provide personnel key management personnel service to the reporting entity or to the parent of the reporting entity. So in any case, as long as a company want to transact with the reporting entity, and that company also provide a key management personnel to the reporting entity, so because that person is inside the two board, then we say that company is a related party. Now what is close members of the family of a person? Now are those family members who may be expected to influence or be influenced by that person in their dealings with entity and include. So any person that we say is a close member of the family of a person, for example the manager, let me say who are the close member of the manager. So we say as long as they can influence the manager, they are a third party. And who they can be: one, the person's children or spouse or domestic staff or domestic partner. So the person, the manager, the MD or the key management personnel, their children, they are a third party. Their spouse, so if their wife trade with the company, we say that the trade between the wife of the key management personnel and the company is a related party transaction. Children of that person's spouse or domestic party, so the children is also a related party. The dependent of that person's spouse or domestic partner, so the dependent maybe any age on any old age individual, their grandfather, grandmother, so they are also a related party to the key management personnel. What is related party transaction? Is a transfer of resources, service or obligations between related parties, regardless of whether a price is charged. Now, as long as there is a transaction between related party, even if they did not charge any fees, no price is in charge on the transaction, that transaction is a related party transaction and it should be disclosed. The value should be disclosed. What is key management personnel? Are those persons having authority and responsibility for planning, directing and controlling the activities of the entity, directly or indirectly, including any director. So when we say key management personnel, we say any person that control the activity of the reporting entity, directly or indirectly. We say that person is a key management personnel, such as the executive directors, the top managers. They are key management personnel, so they are related party to the company. Their wife, their children, their dependents, their domestic staff, they are related party to the company. Now I want to say control. I want to define control because control is defined by control, joint control and significant influence. They are defined by their respective standard. So IAS 24 does not define control. It does not define control. But why control is defined, or let me say this, the data I'm giving you is extracted from their relative standard. For example, if you can look at IFRS 10, define control. So the control arises when an investor has power over the investee, right to variable returns and the ability to affect those returns. That is control according to IFRS 10. While IFRS 11 joint arrangement define joint control. Why significant influence is being defined by IAS 28, investment in associates. All these standards will be treated. Maybe some might be in our advanced class in corporate reporting. So you can look at the definition of control, joint control, and significant influence from their respective standards. Now, what is government? according to this standard. So don't say and any government contrary to your PSA or that is PSAF. According to IAS 24, government refers to government and government agencies and similar bodies, whether local, international or national. So they are government according to standard. A government-related entity is an entity that is controlled, jointly controlled, or significantly influenced by a government. By a government. By a government. So parties deemed not to be related. Now, you should understand these parties. They are not related. These parties are not related. So whenever you see this party in a question, they are not related party. One, two entities simply because they have a director or other member of key management personnel in common, or because a member of key management personnel of one entity has significant influence over the other entity. Now, what was the two entities? Now, the entity, two entities. Now, let me say company A and company B. Company A has Mr. A. Company A has Mr. Z as key management personnel. The company B also have Mr. Z as key management personnel. Both of them share the same key management personnel. Now, if the two entities do transaction, then the two entities, they are not a related party. As long as just because they share the same key management personnel. Two venturers simply because they share joint control. Two venturers means the person itself. Let me say they know of a joint venture A. I know of joint venture B. They come together and open a company called joint venture. If company A, do you know of joint venture A has his own company, and the owner of joint venture B has his own company. When both of their company transact to each other, that company, they are not related. Provider of finance, trade union, public utility, government department, agencies, in course of their normal dealing with an entity. So provider of finance like banks. So if banks trade with the company, that bank is not a related party. So all these are not a related party. 3. A customer, supplier, franchisor, distributor, etc., with whom a significant volume of business is transacted as a result of economic dependence. So such customer is not a related party. Now let's look at this illustration. In the following examples, identify related party transaction between all parties and state any additional factors to consider in order to form a conclusion. Now let's look at WPLC. WPLC holds a controlling interest in X Limited and Y Limited. Now WPLC has controlling interest. That means both company, because WPLC control both of them. Z Limited is a wholly owned subsidiary of S Limited. Z Limited is S Limited that owns Z Limited. B. Mr. Z owns 75% of the voting capital of A. That means Mr. Z is the owner of A, and 40% of the voting capital of B. H and W, we are husband and wife. They are couple. Are the directors and majority shareholder of Q Limited. You see, is a related party. H and W, they are related to Q. The company makes purchase from P Limited, a company jointly controlled by W and their daughter D. D is a director of P Limited but owns no shares in Q Limited. But remember that the director, the D, is a related party to Q Limited because of their. So let's look at the solution to the A. Now for the A, WPSC. WPSC is related to both X and Y because WPSC has a controlling interest in both. So both of them, they are subsidiary to WPSC because of the controlling interest. Why X and Y are related? Because they are under common control of WPSC. So they are fellow subsidiary. X and Y are fellow subsidiary of WPSC. So S and Y are also related because they are under one umbrella, which is WPSC, which is they are control both of them. Z is related to X because of its subsidiary status. Z Limited is also related to W as indirectly controlled by WPSC through WPSC holding of S. So because X owns Z, then indirectly Z is also related to what? WPSC. Now let's look at Mr. Z. Mr. Z is related to A because of the subsidiary status of A Limited. If you look at it, we are told Mr. Z has 100% holding in A. That means it's also related. Mr. Z is also related to B. Is an associate of Mr. Is an associate of Mr. Z. B Limited is also related party to A, and B Limited are not related. Now look at it. A and B are not related because A is not owned by Mr. Z. And A is not. Assuming A owns B, then we say A and B are related. But A and B, they don't have any related party, so A and B are not related. Although they are both owned by Z, they are no common control because Mr. Z only has 40% stake in B. So that means it's not a control because if you remember, they are not under a control. Assuming they are under the same control as a parent, then we will say A and B, they are related. But because Mr. Z does own A and A does not own B, and Mr. Z just owns 40% of B, then A and B are not related. But Mr. Z is related to A and is related to B. Now let's look at Q Limited. H and W are both related to Q because they are key management of the entity. Now because they are key management of the entity, they are related to the company. D could be considered to be close family to H and B, but this is only true if it can show that she is influenced by them in business dealing. Now, as I said before, not all children or not all spouse are related. As long as some children, they cannot influence their father in any decision of the father, so that child is not a related party to the father in business transaction. While any children, any spouse that can influence any couple that can influence each other in business transaction, then we say they are related. As long as they cannot influence each other, then we say they are not related. P Limited is related to Q Limited as it is jointly controlled by a member of the key management personnel of Q Limited. Therefore, any business dealing with the two entities will need to be disclosed. So P and Q are related. Now, you can look at the purpose of related party disclosures. The purpose of related party disclosures. So when we look at the purpose, we look at the price. We look at the pricing method. And we look at this last question. Question 3. Question 3. Question 3. So look at the purpose of related party disclosure. So looking at the purpose of related party disclosure, this purpose is also from the objective of the standard. So if they ask us the purpose, the reason for related party disclosure, is this objective of the standard or is part of the scope of the standard? Now I explain the purpose, the reasons of related party disclosure. Though I may not explain further, though you can read the notes and understand. If any question, you can easily ask me. I'm free. Easily ask me. 1. Related party relationship are a normal features of commerce and business, because they are related party is always a normal. You always see them. You will see same subsidiary, it transact, parent company transact with the subsidiary. So they are normal norms of business. So that is why we must disclose it. Related party relationship could have an effect on profit or loss and financial statements of and financial position of an entity. Yes, because of the price that will be charged during related party might not be at arm's length, so it must affect the profit or loss. So that is the reason why we must disclose it, the related party transaction. The profit or loss and financial position of an entity may be affected by related party relationship, even if the related party transaction do not occur. So you must also disclose this thing, because even if it does not occur, related party transaction, they may decide to cancel transaction at any point in time because they are related. They may not follow the normal rules or the normal business terms that the company will do with third party, because they are related. They will cancel business and enter transaction at any time. So this may affect the profits or loss. For these reasons, knowledge of an entity's transactions, outstanding balances, including commitment and relationship with related parties, may affect assessment of its operations by users of financial statements, including assessment of the risk and opportunity facing the entity. Because of the balance and all these things, it will affect the users of financial statements to take decision. So there will be risk. So that is why we must disclose it, because of the risk that users will face because of the related party transaction. The users of financial statements will normally expect the financial statements to reflect transactions that have taken place on a normal commercial terms. So those at arm's length. So that is the reason why we must disclose interparty transaction. Now the method, the pricing method, because of interparty, they always use different method. They will not use the market price. 1, they use comparable uncommon price. Comparable uncommon price to transact business within each other. Resale price. How they use a resale price to reduce the margin to arrive at a transfer price. They use cost plus method. They can use cost plus other margin or markup to form the selling price. Sometimes they use no price. They will not sell. They will not use price at all. They just transact goods without quoting any price. So this is also form the pricing method used in related party transaction. Now let's look at this illustration too. This is adapted from ICANN past question. ICANN May 2019. Because of our time, I will not be able to read the question. So I will send the question to us so that you can understand the question and look at the solution. So if there is any question, you may ask me. Now, required, draft a report that the party will present to the chairman of the board of directors of Grand Canyon Nigeria PLC. Your report should cover the following: A, reasons why it is important to disclose related party transaction. Then B, the nature of any disclosures required in related party transaction. Now the reasons are covered. I will say a report. So these are the headings of the report. Now the report might come in form of memo. Sorry, I just can we call a memo? There will be Grand Kano Nigeria Limited at the heading from which is we can use any name, the accountant, then to the chairman. They can put dates, they can put subject. The subject matter is the heading I just put here. Now for the A, it just simply use the purpose or the objective of the standard as the reasons why it's important to disclose the related party transaction. Why the B? Why the B? The B. Disclosure required in transaction 1, the factory building. Now when you look at the factory building, let me just look at the point of the factory building. The factory building, when you look at it, you find out that it was sold at 300 million naira, which is the net of selling cost of 5 million naira. Why the market value is 322,500,000 naira. And why the carrying amount was 375 million naira, and its value in use was 270 million naira, and they sold it to them. Is that the price? Is that the actual price? Is that the value they should use to sell it? Now that price is incorrect. So we should look at the recoverable amount according to IAS 36 impairment. What is the recoverable amount? The recoverable amount is the higher of fair value less cost to sell and value in use. Now when you look at the fair value is the fair value, which is the market price, is 322 million 500 minus the selling cost, which is 5 million. So we have 317 million 500. Why the value you use is this? So the recoverable amount will be what? The recoverable amount will be 372 million 500. The difference is what? Between the amount they sold the asset is 300. They sold the building is 300. The factory building is 300 million. Is 17.5 million. So this amount will also be highlighted as in notes as the related party transaction, that the reduction in price, which is not at arm's length, so it should also form as the notes. It should also form as the notes. So now what are those things we must disclose? The factory building sold to the brother of the managing director is a related party. She must tell them that this was sold to the brother, which is a related party. Why B? We have to evaluate the substance of that transaction, which is what are the substance of the transaction, what are they transacting, which is the building. IAS 24 requires disclosure of information about the transaction and outstanding balances. So these are standing balances. These are the figures that we should be disclosed. Tell them that okay, the building, the kind amount of building is 370 million. The recoverable amount is 317 million 500,000, and the amount sold was this, which is lower than the recoverable amount. So it's different. These are the outstanding balances that should be highlighted. Why the other part is transactions, sales of goods to the finance director. Now in this particular scenario, you find out that the director sold goods to his son, and the goods is it's worth 750,000 every month. Now what is the total amount of the goods in a year? Is 9 million, and we are giving the revenue of the company. The revenue of the company is 4.5 billion. When you look at it, the 9 million to this is insignificant. It's very insignificant. It's not material. So we don't have to disclose this 9 million. the 9 million because it's insignificant. We are told that the company also said a car to the director, to the managing director, which is by 375,000, which is, and the market value is 1.2 million. Now that car sold to the Grand Carlo is also insignificant. Is insignificant. 1.2 million to the revenue of the company is very insignificant. So that is not does not affect it. So we might not disclose this as a related party transaction because of the materiality in doing so. It's not significant. So I've highlighted things that we talk about according to this. Disclosure of related party transaction is only necessary when the transaction is material. So this is not material. In this situation, it is not material to both the company and the financial directors. However, IAS 24 confirmed that the director is related party and action with the director should be disclosed. So because of the director are related, that is why we are trying to disclose it. We are trying to highlight all these things, though is not material. IAS 24 requires the disclosure of compensation paid to the director. Also include subsidiary goods and benefits in kind. So we also disclose the car paid. Okay, at least let the users know that okay, the company sells car to the director. So just disclose it, though it's not significant, it's immaterial. Therefore, the details of the transaction should be disclosed, including the amount of the transaction and any outstanding balances. So these are the items in which the standard says we should disclose. So you should read up the disclosures requirement of the standard. So if there's any question, feel free and WhatsApp me or call me, so I will attend to our questions. With this, we come to the end of tonight's class.